Good morning on this incredible March 26, 2024. It is now time to turn up your Tuesday. Today, we are very content driven when it comes to a subject that, when it comes to life insurance, a lot of folks do not talk about this enough. Okay. For example, did you know, all of you right now, you have a 1 in 400,000 probability of dying from an avalanche? Has anyone ever seen an avalanche? Because I sure haven't. Maybe a tiny little rascal, okay? But you also have a 1 in 8 million chance of dying from a shark attack. So those folks that like to go out in the ocean in the summertime, I typically don't go out too far because I don't know. It's not like I'm afraid of sharks, but I ain't never seen one out there in Topsail. But you also have a 1 in 3 million probability of dying from an alligator attack. You are more likely to die from an alligator attack than a shark attack. That's crazy. Then check this out. Especially when it comes to our seniors, you have a 1 in 1,800 probability of dying from a fall. Now, a lot of seniors fall after the age of 65. So that's like, if you're out there today, I don't know, it's kind of morbid to probably, tell your seniors that. But 1 in 1,800, 1 in 6, you will get a heart attack. But here is the number one stat. You ready for this? 1 in 1 will die someday. That's right. I'll repeat that. 1 out of 1 will die someday. When? I have absolutely no idea. So when it comes to death claims being paid out, that equals life insurance has actually fulfilled its duty. When a life insurance policy pays out, that's a death claim. Okay. And that paid out, that's what the whole purpose of. This is why people get life insurance, is so that they get that death claim paid out to their primary beneficiary. And folks, as we know, life insurance, when it's paid out, that death claim, it's a tax-free death benefit. So it's one of the greatest investments on earth is life insurance. You could pay 1, 2, 3 months into it, and then boom, something happens to a loved one. They only paid 3 months into it. It was a $25,000, $1 million term policy, let's say. Bam, that goes straight to the primary beneficiary. So Adrian, I'm really excited. We've got the new national sales manager, Miss Adrian Mo Money. Adrian, you're in the house today. I know that this is a very passionate subject. Why is it such a passionate subject to you? Have you actually had somebody close to you pass away?
Oh yeah. I mean, I've had several, obviously family members pass away. I've lost a lot of clients. I'm coming up on 8 years with NASB, and there's nothing like the spark in you coming alive for what we do every day, y'all, when you get your first death claim. And I know a lot of you have been here for a number of years, like myself. I know that you've experienced death claims as well. I know a lot of you are also very new and have not experienced that yet. But what you always told me, Ashley, is that you'll never quite understand how very important what we do is and how much this matters, just the day to day, what we do, how important it is until we get that first death claim. So, yeah, I mean, it's obviously a passionate subject. If you aren't passionate about this part, I don't know what to tell you. But that's when really this business comes alive, when you help a family in that way. So just a few stats here. We've got 331 million Americans in the US. In 2023, there were 2,912,402 deaths. Okay. Life insurance benefits and claims in 2022, there's not a stat for 2023 yet. So benefits and claims in 2022 totaled 797.7 billion. But get this, more than a billion in the US has gone unclaimed because beneficiaries don't know they're listed, or they can't find the proper documentation to get it done. And maybe part of that equation too is they don't have somebody like us helping to facilitate the process with the family. That's huge.
Indeed. Absolutely. I remember it wasn't my first death claim, but for some folks that say, I'm not passionate about life insurance. Neither was I in the very beginning. I was passionate about the result that this industry gave us, but I wasn't so passionate about like, man, is this senior going to like me? Can I relate to a senior? Because I'm not a senior yet. And I remember one of my first death claims, and it was with a young lady, and it was her husband that passed away, and her name was Lois Carter. And I just remember it like it was yesterday. Remember sitting in their home, and he was just a sparky young man, and I would say probably in his 60s. And the cool thing is that she actually did not have any children, but she raised all of her nieces and her nephews. And so they had like, 3, 4 children in their home, and he all of a sudden passed away. Now, this was within the 2-year contestability period. And I remember her calling me, just bawling her eyes out. And it was a $10,000 life insurance policy. And I just remember going over to their house, filling out that death claim, and just having her cry with me. And I was still in shock because I was like, there's just no way he's passed away. And because I feel like I just saw him just a few months ago. And I just remember it took 6 months to physically get that death claim to get paid, because we had to get all those medical records in. But when she got that $10,000 check, y'all, it changed everything for her. And I remember asking her, minus the fact of you taking care of his passing, his funeral, what else are you going to do with the leftover money? And she said, you know what? We always wanted a hot tub. So I am going to get a hot tub. And every time I sit in that rascal, I'm going to think of my good looking husband. And I'm like, that is so awesome. This is what life insurance can do for people. This is what, when a death claim gets fulfilled, that's what it does. It gives somebody peace of mind. It allows them to breathe, but it also allows them to grieve in that passing. And all of us have had some loved one pass away. It's a devastating thing, but when you've got that money that's able to come in there, you're able just to focus on that loved one and the memories that you had with them. So I want to kind of take you guys on a step by step, because if you've never filed a death claim, if you've never gone through it yet, this is really going to give you that ammunition of what do I do next? Like, it's almost like you're in shock too, because if you've never done it, or if you've done it, but you feel like you need to sharpen your skills when it comes to this step by step process. So here we go. Step number 1. And Adrian, if you're able to, I don't know if you're able to take notes in the chat for me, that'd be awesome. And vice versa for you. So step by step, number 1 is you got to identify first. Once you find out that the person has passed away, they are pretty much the primary beneficiary is either going to call the life insurance carrier or they're going to call you. I love it when they call you the agent. Why? Because you're able to kind of be a lot more heartfelt with them because you know their family and you can talk about them and be empathetic with them. Versus, oh, let me go ahead and call the claims department. Not saying that they're not empathetic whatsoever, but it just gives you a little bit more home feeling when they can physically call you. So number 1, once they get on the phone with you, the primary beneficiary, number 1, identify if the insured had multiple life insurance policies. Have the beneficiary check their bank accounts for any active policies. Go back at least a year. Go back at least a year because you never know if something's been paid up. And also check on employer group life policies. Check out with their financial advisors if they had one. Income tax records, which could indicate a dividend. So if you actually maybe call their CPA if they have one, if not, when it comes to their income tax records, they'll be able to see, oh, I had a dividend from this over here that they didn't even know about. And also, this is huge. I hope everybody writes this down. The Department of Insurance, it has a database for life insurance policy locators. It's content.manic.org. So anytime somebody passes away, go there so that, hey, look, you never know. There could have been something from a long time ago that was paid up as a child that their great grandmother gave to them. Okay. Number 2, obtain a certified death certificate, not a copy. You cannot make a copy of the original death certificate. It has to be a certified original death certificate, insurance policy number. So these are the things that the primary beneficiary needs to have. You can also file the death claim on their behalf. Now, when I say file, it means you're starting the process, but they still need that primary beneficiary signature, including the paperwork. But just to get that claim started, you as the agent can physically do that. What you're going to need is this: the insurance policy number, the date of birth, their full name, the date of death, also the cause of death, where they died, and then of course the name of the beneficiary. So that's very, very important. That's like huge, is you got to have that certified death certificate. I remember This was many years ago, back in probably 2016, a 47-year-old. I insured his parents, I insured the aunts, the uncles, and I think even Alicia Randolph knows this family, the Hansleys. And I remember insuring their son, who was 47, passed away. He had a $25,000 Liberty Bankers life insurance policy with me. Passed away within 3 months from what they said is like a drug overdose homicide. They did not have a death certificate for weeks, especially when it comes to like some crazy death. You probably won't get that death certificate for a wee bit. This took, I want to say, about 5 weeks before we actually got a death certificate because they weren't sure if it was homicide, suicide. They just weren't sure. But once they ruled that, I'm going to tell you something a little bit later about what happened to that policy here a little bit in the next few minutes. But very, very important that you get the certified death certificate. Step number 3, you're going to have to choose a form of payout. And this is what you're going to have to ask the primary beneficiary. All this can be going over the phone, by the way, with that primary beneficiary. That form of payment, when it comes to whole life insurance, lump sum payment. Do you want it to go directly to the funeral home? Anything left over is going to be a check paid to the primary beneficiary. And they let it be very seamless. It's a wonderful thing for the life insurance company just to go straight through the funeral home. And again, anything left over goes straight to that primary beneficiary. What about annuities? Some of you guys, all of us need to be able to write annuities, but there's a couple things when it comes to annuities. They're going to ask you, do you want it to be a specific income? In other words, the insurer, the life insurance company, pays the benefit to the beneficiary, but it's over a certain period of time. Do you want it to be X amount of years where you have this? And the neat thing is that interest will start to accrue. And the neat thing is you're going to be charged for the interest on that annuity money, as far as the interest earned would be taxed, but not the actual death. Like if you let it sit there, in other words, the interest accruing of that is what you're going to be taxed on. The life income. So that's almost like the second one when it comes to annuity is a life income. So you can actually have this payout for life, which is nice. Or number 3 is it's called an interest option. And this one's a very unique one because you don't accept the death claim benefit. You accept the interest from the death claim, and then anything left over goes to another primary beneficiary. So upon your death as a primary beneficiary, then the other lump sum death benefit goes straight up to another primary beneficiary that you name. So that, I think that's very unique. Step number 4, and this is the last one. You ready? Outside the 2-year contestability, once that is submitted, you file the death claim. If it's outside 2 years, that will pay out typically within 30 days. It could be, I've actually seen it where the moment you file the death claim, some carriers, I want to say Mutual of Omaha does this, they will go ahead and forward a half of that death claim to you immediately, the primary beneficiary, without even a certified death certificate. Once you physically get the death certificate in hand, bam, they're going to pay that sucker within 30 days. There's no need for medical records. They just need that certified death certificate and then the primary beneficiary form. So, Adrian, let's talk about this. What are the rights that a beneficiary has?
Yeah, absolutely. One thing too on that that I can add is that the beneficiary has the option to assign the insurance money to the funeral home directly or receive it directly themselves. So I would definitely set their expectation for that if they don't want that money going directly to the funeral home and they want it to come to their hands, just to be very diligent and careful that they don't check that funeral home assignment option in their paperwork, because it could be a mess to fix that. Okay. So as far as the beneficiary's rights, they do have certain rights. Absolutely. Number 1, they have the right to know the policy amount. Number 2, they have the right to know how to file a claim. And obviously that's something that we're talking about, excuse me, setting their proper expectations and helping to guide them through this process. Number 3, they have a right to know why the claim is denied or delayed. So we should be having thorough, consistent communication with them and being proactive to communicate with them what's going on with the policy status, right? Don't make them continuously come to you and ask questions. be on top of it for them and communicate it to them. Number four, they have the right to examine the documents used in reviewing the claim. And number five, they have the right to know how to file an appeal. It's extremely, extremely important. I ask every single person when I sell a policy to them, I say, will you please make sure that either you tell your beneficiary about this policy and they know where it is and they have my phone number, or I'm happy to also give them a call and let them know myself, or both, either way. But they have to know what this is, what you've done. They have to know their rights. They have to know where the policy is, and they have to have my contact information so that I can get in touch with them when that time comes.
I want to talk about the proper etiquette. So when it comes to, you hear about somebody passing away, and sometimes, again, you might be in shock and you don't know what to do. I think for me, I think for all of us, I think this is a very big thing, is what we're doing enough for our clients. So let's talk about the proper etiquette when it comes to, now that we understand the beneficiary rights, Adrian, what's the proper etiquette that once we find out that this person has passed away, what's the proper etiquette there?
Yeah, I mean, absolutely. So, these calls are really hard to get. They are really hard to get. You have people calling you crying, just super upset. So obviously we need to meet them in that sympathy and that empathy, feel that with them, express how incredibly, sorry you are for their loss. Give them that time to cry and to be emotional with you, and it's okay if you get emotional with them too. Let them see you as a real person, not just as an insurance agent. If you get a missed call from them, a voicemail, be sure that you quickly return that call. Always, as we always are supposed to do anyway, but be sure that you're extremely diligent to get back to them with a sense of urgency. They're sitting there waiting on you. They don't know what to do in a lot of cases. So in a lot of cases, they haven't called the insurance company yet. They're relying on you completely. You want to go ahead and make sure that when you have that conversation with them, that you're asking questions up front, because if you jump the gun and you call the insurance carrier to submit this claim, the carrier is going to say, well, when did they pass away? What caused their death? And they're going to ask you certain questions. What you don't want to do is be a delay in that situation and having to call the client back and ask questions that you failed to ask them at the first conversation. So be sure that you're asking them all of those questions up front before you contact the carrier. I would schedule a time to go see them. I understand a lot of us have business in different states. If you're able to, I would schedule a time to get in front of them. Sit in front of them, bring them a pie, some kind of baked item, bring them a meal, bring them flowers, bring a card, bring something with you. Be part of the family in this moment. We say at the point of sale, we say that we're going to do these things. We say that we're there to service them, and we're there to service their beneficiary when they're no longer here. So do that. Follow through with what we say we're going to do at the get-go. Call with them to get the medical records, because that's one thing that's a huge delay. Sometimes, especially in the contestability period, the carrier is waiting on medical records. So that's something that literally we can help them do. They're already so filled with grief, and there's 100 million things for them to have to do and think about, right? And business to attend to when somebody passes away. So do everything that you can do in your control and your ability to help facilitate this, to help make this as smooth of a process for them as possible. So contact the doctor's offices, their hospital, what have you, to go ahead and get those medical records, and you can go ahead and send them in on their behalf to the insurance company. And then lastly, I'll just say, mail a sympathy card. Make sure that you're mailing sympathy cards. That goes such a long way to let them know that you are truly there as their advocates, that you care about them and their time of grief, and that you weren't just there to collect a paycheck.
Amen. Also too, I remember, I think it was, I can't remember if it was me and Donna, where we went to a gentleman and his wife passed away. And when we talk about the proper etiquette, everyone's got a different way of handling emotions and handling other people's emotions. Sometimes all they need you there is just to listen, and they'll talk about their spouse and they'll talk about memories. So just like what Adrian was saying is, not just ask questions, but when you're with them, like have them cry on your shoulder and, just tell me all about her. Tell me about your wife. Like, I bet she was just amazing. I know I only had a short amount of time with her. And Don, I don't know if you remember that. I'm pretty sure it was you that when we were there with that man, it was a couple years ago, 2 years ago, I believe, and just the sweetest man ever. And sometimes that means that you also have to like help them fill out the death claim, like because they're shaking so much that they just can't do it themselves. And all you need is, hey, I just need your signature right here. I know you've got the death certificate. Let me go ahead and overnight and mail this, right? And you're like, well, do we pay for the overnighting? Yeah. I mean, I think that's a kind gesture to do. And I just think that's very important to be very empathetic during that time and not rush the process. But also, I've seen people that have stayed all day somewhere, and just be mindful of your time, because again, you've got family that's coming in and out, and so forth and so on. So here's a couple things to expect. Now that you kind of understand a little bit about the step by step, what to do, you understand the beneficiary rights, proper etiquette. What are some things that you need to expect? And a lot of folks have heard about probate. So when somebody is a widow and they're not married, let's say, or they were married and their spouse has already passed away and it's just them, they will probably go through probate unless you actually avoid what I'm about to tell you. And I think this is very important to tell your seniors to put things in action now, right now. I cannot express how important this is. Situations when you can avoid probate court. Are you ready for this? First off, what is probate? Probate is when somebody passes away, they don't have a last will and testament, they don't have an estate or a trust, and life insurance is technically like probate free. The government can't touch the life insurance policy whatsoever, which I love that fact. It goes straight to the primary beneficiary. Government can't touch that sucker. Probate is, hey, listen, if there's any debts that this person had, what they're going to do is they're going to make sure that they have the executor. They find who the executor is. If there wasn't a last will and testament, they will typically go to like the next of kin, whether it's a kid or, just pretty much that next line of kin, aunt, uncle, etc. That person is going to be named the executor if it's not already named. And then they're going to say, listen, we now need to distribute these assets. So this is how you can avoid probate. Number one, you can have a joint tenant of real estate. Deeds show rights of survivorship. Dustin, when Grandma Betty passed away last summer, she was with us for 3 months. I'm so grateful for that she was here and not in a nursing home. Thank you, North American Senior Benefits, for that ability and opportunity to be in those moments with our grandmother. But years before, Dustin was put on the rights of survivorship when it came to her home. Now, it was already paid off. She was a widow at this point. So we made sure years ago that Dustin had the deed as far as the rights of survivorship if something happened to her. Number two, transfer on death deeds for real estate and also vehicles. My mom, we lost, oh my gosh, I feel like we've lost 3 grandmothers in the past 2 years. Devastating. But I want to say it was 2021, kind of when COVID was still kind of not so much rampant, but my other grandma, Betty, she passed away. And it was from, I want to say it was kidney failure, but she had everything in order. Okay, you guys, like we're talking, she had the estate, she had the last will, but what she didn't have was she did not transfer the deeds to her vehicle. So you want to talk about a headache for my mom to get this vehicle that was probably worth maybe $20,000. And she actually drives it today, which is just the cutest thing ever. I love that. But it was hell in the courts for her to physically get ownership of this vehicle. A year, no joke. It was crazy. Number 3, designated beneficiaries on bank accounts, brokerage accounts, retirement accounts, life insurance. It's so important. Hey, Miss Johnson, I know that it's just you that's living here. I know that we just took care of this life insurance policy. The primary beneficiary is going to be your son. Is he attached on all of the things that you physically own? And she's like, well, I don't know about that. You need to start that process right now. You need to make sure that he is the designated beneficiary on those accounts. And a fourth thing is this, and a lot of people, and again, we do not educate this enough only because of time wise, but I think this will be a great topic for another call: irrevocable trust and revocable trust. I have a revocable living trust. Pretty much the main difference between an irrevocable trust and a revocable: irrevocable means you can't change it. Once you put that sucker into action, you, as the person, I want to say you're the, I don't like saying the word, tester. Okay. There's many different words for these things, but you, the person that physically, the grantor, put that a revocable trust in place, irrevocable, you can't change it. Revocable living trust, you can change. So actively, we actually just changed it when it came to our living trust. It took us, gosh, I would say about maybe 35 days to put this revocable living trust together that we can change. The government can't touch that. You're able to put so many things. You can put your property, you can put your anything, vehicles, like boat, everything, cash, money. You could put a lot of things in these revocable living trusts. I definitely recommend 1,000,000% a revocable living trust. I don't know if I've actually seen yet a great reason why to put it into an irrevocable trust. What is a grantor of a trust? So grantor of trust, and I think I might have this incorrect, but yep, I might. So I'm not even gonna say that. Trustee, they're gonna have a trustee. I'm gonna say this. Do not name a person when it comes to the trustee of a living trust. You want the trustee to be a bank or an organization. Those are the people that manage the money inside that trust. If you do a person, there's nothing that oversees that. So you've got this person that's overseeing the money when it comes to what's inside that trust, property, vehicles, etc. Do not put it in a person's name. Put it in a bank. Okay. Have that bank make sure that they are able to manage and distribute that, because there's corporate laws and regulations to those trustees. And of course, the beneficiary is the one that actually receives the money. So, Adrian, pretty much we only have a couple more minutes. Talk to us about this 2-year contestability. This is on all life insurance policies. Doesn't matter if it's a graded death benefit with American Income General. Doesn't matter if it's day one coverage with Mutual of Omaha. Talk to us about the 2-year contestability and what happens when somebody passes away within that 2-year contestability.
Yeah, that's right. So 2-year contestability period, because of this, we have to be sure that we are completely thorough when it comes to our underwriting up front, y'all. Like, we need to spend some more time to dig into diagnoses, into their prescriptions, into their records. Take the extra time, take the extra step when in doubt to call the doctor with them. Be sure that you're catching as much as you possibly can on the front end of things to make sure that you're giving them the absolute best probability that this is going to pay out, and yourself, because if they pass away, for a lot of our carriers, if they pass away in the first year and even up to the through the second year, you're going to get a charge back, and that's not going to feel very good, right? So if we can be as diligent and thorough and proper as possible up front to do those things, as far as underwriting goes, we're going to avoid the frustration of getting that charge back and of that death claim not paying out. So take that extra time. Suicide, as a reminder, will not pay out in the first 2 years. If somebody dies of an accident but they lie on the medical questionnaire, it's not going to pay out. It's not going to pay out. It's going to go based on that medical information.
And Adrian,
if a claim is denied.
Adrian, let me just say something real quick, because I was going to revert back to that story real fast since we're on that quick little subject. That 47-year-old that passed away of a homicide drug overdose from one of his friends. So you would think, actually, that is classified as an accidental death. He died within 3 months. So he was in the 2-year contestability. He had day one coverage with Liberty Bankers. They did not pay the death claim. I was devastated. Why? Because he said on the phone interview, I am a non-tobacco user. They found one medical record within 5 years. He had a sinus infection. He told the emergency room doctor, hey, yep, I occasionally use tobacco. Okay, not 5 years. I'm sorry. It was within 1 year. They did not pay the death claim. It was devastating. We tried to appeal it, and of course, it still didn't go through. So even if they die of an accident within 2 years, if the medical health questionnaire does not match their medical history, guess what? That sucker won't pay out. So back to you, Adrian.
Yeah. So just piggybacking on what you said, the beneficiary can appeal the decision if it's being denied, but they have to gather obviously all the necessary documentation and anything relevant to support their case. You can hire a life insurance attorney through your state's Department of Insurance. But we have to be sure that we're setting the proper expectations with the client in all cases. Don't make the mistake of saying this is going to pay out immediately. Make sure that you explain the 2-year contestability period to them. In a lot of cases, they think it's a waiting period. They think it's a waiting period. It's not a waiting period, but at least be sure that you explain the 2-year contestability period and why it's so extremely important to make sure that they're being honest and upfront with you about everything regarding their health. Anything else you want to add on that, Ashley? Setting proper expectations.
No, I just think the big thing is don't rush it, folks. And I like what you said, guys, inside that 2-year contestability, until they get all the medical records of the past 5 years, that's including all the doctor visits and all the doctors, if they have a cardiologist, if they have, a neurologist, they have to have all those medical records. This could take weeks. Don't even give them weeks. I would say minimum typically 3 months to 6 months. So it is devastating. I know that hurts, but you telling that person the truth up front, I can't tell you how much that helps them. Okay. And again, it's like, I know it sucks, but they got life insurance a little bit. I don't like saying the word a little bit too late in life, but these are the, I hate saying the word laws, but these are the provisions inside life insurance that protects the life insurance companies from fraud, from people just, trying to, I hate saying the word, kill somebody off. Okay. Within that first 2 years. So guys, I hope you learned a lot. I'm sorry we went 3 minutes over, but it's a very sensitive subject, but I think it's so important for everybody to understand this is going to happen. And when it does happen, how do you arm yourself to really being there for your seniors and for your clients and for their families? Other than that, folks, Adrian, thank you so much. Incredible job today. Guys, let's turn it up on this Tuesday and let's make it happen. And let's take care of our seniors out there. Y'all take care.